Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at this week in Forex, we can see that we had some much better than expected economic releases this week. We had good PMI from Europe, UK, US, and China, and of course on Friday we had the much stronger US employment report. And so even though last week the FOMC promised to keep their interest rates low through 2014 and a slight mention of QA3, you can, with this good positive data with the economy, you can probably see that QA3 probably going to be put on hold for the short term. Of course, we're still waiting for the Greek debt deal. Another week is coming by, no deal in place. Again, the thing that's in debate here is how much the public sector is basically going to have to suck it up and lose. But of course, the debt deal is the next hurdle in order to receive the next round of funding from the Eurozone, EMF. And what we're going to be watching for this week is some interest rate policy decisions, the RBA, the Bank of England, the ECB, European Central Bank, and that's really about it. There's no, as far as top tier data, Australian retail sales, Germany factory orders, Canadian PMI, UK, nothing for China, which we know can move the market. Nothing really major from the States except for consumer sentiment on Friday, but that really moves the States market, doesn't really move Forex as much. So not a lot of data this week. There will probably be, this is when you see statements from finance ministers or statements about the Greek debt deal, that's what put in the market more than the actual releases. Let's pull up the charts and let's take a look. Now we're going to go ahead and take a look at some of our market sentiment leaders. And first, we'll start off with our inverse relationship with the dollar. Strong dollar, weak market. Strong market, weak dollar. And we said January was a good month for the market, and January was not a good month here for the dollar. We can see this pullback here. But we're pausing here at this 79. We'll see if we can get some catalysts. Maybe consumer sentiment on Friday might give us a little something. Not a lot of news. So again, we'll have to go to our Forex calendar to see what could really affect the dollar here. But overall, I'm going to go with sideways. Maybe even sideways to down here for the dollar. So a weak dollar means what to gold? And gold has finally found its way. Coming back up, of course, with the strong market. Gold fell off a little bit here on Friday. But it's trying to get back up here to 1700. But what we did say last week was, we said, look at these wicks right here. So it needs to get above 1750 to really say that we're heading up to 1800. And we did peek our head above there for a moment, for a slight moment. But Friday's actually brought us right back here. So, that's where we pause here also. So it's going to be interesting. I'm going to say sideways to up here for gold. And we know crude oil in its 102 to 96 range. It's doing that again. It's getting down here to 96. So there's definitely, you can see it got down here to 96. The buyers came in and brought us right back up. So that, those of us who want to trade that channel, that's fine. Gas over 350. Really, really impressive. We're going to go ahead and take the time to look at the euro dollar chart on a daily chart, and we can see the wonderful month that was January. And as we come into February, we're starting to get a little sideways action here at the resistance point of 1.318. Um, the market is consolidating a little bit. And the thing that's interesting is that the euro dollar was actually a little bit stronger than the pound dollar, but the euro dollar has leveled off here, where the pound dollar has made its move all the way up here to 200 moving average. So euro dollar is starting to lag just a little bit here. We can see here on the 1 hour time frame, you can really see the range that the market's in here as far as consolidating. I really could come in here and draw something right here. And you can see that the buyers are definitely buying up this 1.3079, 1.308 price level. Little bit of lower highs here, but overall we can see the market is definitely consolidating. Ever so slightly, the euro is in control, but you can really see how they're just snaking each other here. So that's why we really have this sideways price action. The euro is starting to trend lower, although it is just above its long-term moving average. The dollar is also trending lower, but just popped its head above its long-term moving average. And right now, our indicator is right in the neutral zone. As we we're just saying, the pound dollar has made a move. Once it hit its low, the month of January was perfect for the pound dollar, and it ran all the way to resistance and the 200 moving average. And this is exactly what we talked about last week, about will it, now that it clearly closed above this long-term downtrend line. This is a monthly downtrend line, and once we close above that, that's bullish, and it ran up here to the 200 moving average. It's exactly what we talked about last weekend. Now we're starting to see a little consolidation here on the 1 hour time frame, starting to see that snaking like we saw in the euro pound. But we can see that the pound is trending higher above its long-term moving average. Dollar's trending lower, but just pokes its head above the long-term moving average. So it's going to be interesting to see what happens here. If we can break the 200 moving average, break 1.587, we have a new range to get ourselves into. And finally, the dollar franc, which has been going the opposite way. You can see how it's coming down here on the daily and now starting to go sideways. And notice that where it's starting to go sideways, here it is going sideways. And you can see that back here in November of last year, this is where it bounced a little bit. I could go ahead and draw a line if I wanted to, but you can see we got this other line at 0.891 that I want to see if this is going to be the support. If we do bounce a little bit here, I'll draw the line in, but I want to hold off right now. Like the euro dollar, look at this consolidation. Just look at it. A lot of snaking, as with all three of the pairs that we're watching. Little divergence here as the dollar took control. That allowed for this move spike up here, but overall, a lot of snaking. The franc is trending lower, although it's just above its moving average. And same thing for the dollar that we've said all three times. Our indicators in the middle. So as we said, not a lot of data this week. Let's take a look at our watch list. Moving on to our watch list, we have our low volatility watch list where we're watching for consolidation on a 1 hour time frame using Bollinger Bands, looking for that Bollinger Band squeeze. But right now we have just two candidates. Now these are not set up yet, the euro dollar and the pound dollar. They're not set up yet. They're not perfect, but there is a potential. We had a little whipsaw action that really does not allow us to properly, textbook call these Bollinger Band squeeze plays, but we do see some consolidation in these two pairs. So it's something that I want you to watch. For our inside bar watch list, we don't have any candidates. That's where we're watching the day's high and low range compared to the previous day, Friday compared to Thursday. We had a lot of inside bars on Thursday. And Friday we have some similar sized candles, or we see some big moves. So we don't have any candidates. But what's interesting to know is that Thursday there were a lot of inside bars, so we still may see some continuation of those breakouts of Thursday's inside bars that happened on Friday. Now, as we come to Education Spotlight, we're talking about, as we usually do, the overlooked importance of emotions in trading. I mean, it's so important that we find a way to cope with our emotions, and that we don't let all of our emotions here get into our trading. And one of the questions that I often get, especially on my stock market videos, is this whole sell the news concept and a lot of people bring politics into the economic releases. Well, this can't be true, the unemployment rate. Well, our job as investors is not to really determine whether or not the data that's being released, the debt deal, will it be positive or not? These industrial productions and the ECB, the interest rates. It's not our job and the pumping of the money. It's not our job to interpret whether it's good or bad, whether the numbers are real or fake. It's our job to see how the market reacts to the data and invest using the proper investing strategy. Um, as an investor, you have to wear your investor hat. Now, when you're away from your investment portfolio, when you're with your friends, you can have whatever conversation you want. You can believe whatever you want. But when it comes to your money, it's not your job to determine whether the data is real or fake. It's your job to interpret how the market is reacting to the data, sell the news, uh, they like it, they don't like it, and then use the proper investing strategy than worrying about whether or not the information is true or false. As usual, we want to make sure you take the time to like, subscribe our channel. We have some new stuff that I know I've been talking about it for a month and a half here, but I got a new laptop just to do the production. We're going to be doing a much higher production, not just the PowerPoints. And so in order to do that and do it rationally, I had to get a new Apple laptop. It has to be a Mac if it's me. So make sure you subscribe so you can get a hold of that. And you know about our resources. We want to help you develop that trader's mindset to where you're investing on strategy and not emotions. We can help you do that through our coaching. For those of you who would like to put our expertise to work, we do have managed forex accounts. We use the leading forex brokers, full transparency. These are your accounts. You're not getting into some fund where people can cipher off money. It's your account. You're giving us the authority to trade it, and we'll take the time to develop an advised trading plan based upon your risk tolerance and your investing goals. And of course, if you want signals to trade them for yourself, we have that too, or you can have those signals traded automatically. But in the end, as we always say, as again we talked about the importance of emotions, you have to be able to willing to pull the trigger. It's not enough just to have the information. It's important to have the information and act upon that. And we can help you do that by developing a trader's mindset and allowing you to be focused on what's best for you and not allowing the noise of politics and the noise of commentary and pundits interrupt your trading. Thanks, guys, and I'll see you next time.